Good morning, everyone. Thank you for coming to the Small Business Finance 101. I am Amy Cobb, owner and founder of Amy Cobb Consulting, and I've been in the accounting and finance industry for 20 plus years as a revenue analyst, senior grant accountant, controller, business owner, and entrepreneur now. I have my bachelor's in finance. I'm a certified QuickBooks Pro advisor, and I also can help you choose the right business structure for you and file all the necessary paperwork for your formation when needed. So if I can ever be of service to your business or help with any advice for your business, reach out to me at amycobb.co. My mission is to empower business owners with financial education. I have bi-monthly Instagram lives with various finance and accounting professionals, and those are 30-minute long sessions that I hope to give you quick tips and advice every Tuesday at 7, every other Tuesday at 7 on Instagram. So please follow me on Instagram at amycobb.co. And I host monthly lunch and learns to dive deeper into topics for business owners. And today's topic is Small Business Finance 101. We're going to be going over business planning, budgeting, and sustaining cash flow. And my guest speaker for today is Damon Johnson. He's the owner and managing principal of DAJ Business Services, LLC. Damon provides CFO, accounting, treasury management, and strategic financial plan development to small businesses and nonprofit clients. Damon holds a Bachelor of Business Administration and Accounting from the University of Texas at San Antonio. Welcome, Damon. Thank you so much for participating.
Thank you for having me. Happy to be here.
Yeah, I can't, let's see. I think you turned off your video. Can you, I don't know.
Yeah, very interesting. I didn't,
there it goes.
There we go. Didn't realize it turned off.
Yeah,
just sitting
thank
here,
you.
so my apologies.
Yeah, no worries. So thanks for doing this with us. And we'll have participants joining in as we go, but I want to be aware of your time. We have the schedule for noon to 1 today. So as people come in, I'll let them in, but let's go ahead and start the discussion. Is there anything you'd like to share?
Yeah, absolutely. Well, first of all, again, I want to thank you for the opportunity to speak to your listeners on Small Business Finance 101. I'm an entrepreneur myself, as you mentioned, so thank you for that warm introduction. I founded this company in 2019, and I founded it under 4 pillars. Just kind of taking a look at my experience. I wanted to make sure that I could offer customers, when they partnered with me, I wanted to let them know that one of my pillars was integrity, the next one being dedication, accountability, and efficacy. And so with that being said, many times, I meet with new clients and they ask me, why partner with DAJ? Well, I have over 25 years or so of experience in this particular area in the corporate environment, as well as advising small businesses. And ultimately, what I feel that, if I can help an entrepreneur focus on running their core business, and while having them partner with me to develop or to provide them objective financial feedback and tracking, that allows them to successfully grow their business and focus on the bottom line and satisfying their customer base, knowing that they've got a trusted partner who is monitoring their profitability along the way.
I love that. I always say that to my clients too. I'm your strategic partner. That's how I really feel that accountants and financial professionals should be. We're their strategic partners. We're here to help them along the way for sure.
Yeah, absolutely. A lot of times in my experience, I have, you receive, hey, all finance does is say no. I'm not that type of business partner. And most of the finance professionals I know are not that way either. We just want to apply some diligence, kind of pressure test what your plans are. And again, we're here to support it. We may not say we agree with that particular way you want to go about it, but I'm sure a good business partner like we like to be will provide us an alternative, if you will, to help you achieve your objective. Because at the end of the day, if you win, we win, right?
Exactly. So that's really well
that's
said.
Thank you very much. And so just lastly, before we get started, I'd just like to say that, if any of your listeners want to contact me, if they feel that, I could be of service to them in the future, I have a website and I'm also on Instagram and Facebook. You can contact me at DAJ Business Services, LLC. on Facebook, my website, as well as Instagram. On the website, if you hit the contact us button, it will generate a box where you can enter in pertinent information, and I will respond to you within 24 hours. And then on Twitter, I can be reached at DAJ Business LLC.
Nice, thank you. And then we will put that in the chat, and then I will share that information as well at the end for sure.
Absolutely.
So I wanted to mention, it's funny because I was having a conversation with a client and he was asking about, you know, is it possible to do, I forgot which question it was, but it was like, not right now. It'll happen, but just not right now. And so it's not always a no, we're counting numbers. It's when can we do that? Let's be strategic about how we implement what you want to do, right?
Absolutely.
So
well
how
said.
do you help your clients with business planning when they come in?
Well, you know, DAJ, we're definitely positioned to be able to help customers develop a business plan. I think the important thing is, you know, let's start with what is a business plan. A lot of people think that a business plan is just this static document that you put together that you need it for, you know, and then you put it away in a drawer. I mean, ultimately, a business plan should provide you a blueprint to success, right? So if we start with that, it's a written document that really takes a look at marketing, the competition. It looks at, you know, what are your financial and operational objectives. Now, it may be used at some point for providing, being able to put it in front of potential investors and things of that nature so they can understand your business if you're in the startup phase, or even if you've been in business and you want to change the direction or grow or invest in your business. And so at DAJ, what we do is we break the business plan down into several components. There's you know, we help them develop an executive summary and kind of a company description. We help them conduct we will conduct market analysis for you to understand who your competition is, what are you selling, et cetera, what service are you providing. Depending on where you are in the business life cycle, you may not have started with deciding, as you mentioned in your open, what is your structure of your business? What legal structure do you want? Help you get set up with the IRS as well as with the state in which you do business in. So we look at things, should you be a sole proprietorship, an LLC, a C Corp, an S Corp, a partnership, whatever is best for you. We help you develop a marketing and sales plan. And then we start putting together the financial summaries and the financial projections. We typically try to look at a 3 to 5 year kind of horizon, depending on the business. And then ultimately we want to take that overall long range plan as part of the business development and then develop an operational budget for the next fiscal year, if you will.
Nice. That's really thorough. And do your clients have they used it to their advantage, all of that information? Because that's really meaty. That's a lot of information for a new business owner to take in. How do you help them digest that information?
Well, ultimately, you know, we sit down and we interview you throughout the process, right? We'll come back to you with, you know, inputs based on our interviews, and we'll give you a chance to evaluate them. I'll use an example that I had very early on in the business in 2020. There was an existing business owner. I think they've been in business for about 10 years, and they were looking to purchase another company. And they just kind of ran their company. They were somewhat successful, but they ran it in such a way where they just essentially had a bank account. And then when it came tax time every year, they would panic and try to pull the information together for the tax accountant to prepare their tax return, because we know that we have to file an annual tax return. And so when they were trying to get a loan, the bank asked them for a series of information, a lot of which would be conducted in the business plan. Matter of fact, they asked for a business plan, as well as you know, a set of financials, and in addition to the tax returns. And so all they had were the tax returns. They didn't have all the other information because that was just the way they chose to run the business. And so they heard about me, we contracted, and essentially I had to, you know, in about a month, put together 5 years of financials, if you will, to allow them to be able to participate in this loan acquisition process. Helped them develop some business plans. And then at the same time, they were also, because they did business with the state of Texas, and so they also needed to present some of this information, and I helped them put together some of this for some grant applications. And so, you know, at the end of the day, I guess in summary, what I'd like to tell business owners is that you may not need it now, but it's a good way to continuously evaluate the success of your business. But at some point, if your business grows, which I believe most people want their business to grow in some way, shape, form, or fashion, if you have the proper infrastructure in place, it just makes it that much easier to be able to participate in those processes on a more timely basis.
Those are two great examples, loan acquisition and even grant applications. You're going to need that information to take your business to the next step. So that's a
Absolutely.
business, your business plan is like your foundation. Would you agree?
I agree with you 100%. And that foundation constantly needs to be reinforced, if you will. So pull that business plan out from time to time and evaluate it and see if it's still relevant. Do you need to make changes to it? Because dynamics change. Competition enters the fray. Prices change. A lot of different variables that are beyond the entrepreneur's immediate control. But if you have a business plan or something to work for in terms of a budget, you can always evaluate your decisions against that and make changes as necessary.
Oh, perfect. That is awesome. Those are really great examples. So in your experience, what are the primary motivators for individuals wanting to start a business?
These are some of my own individual motivating factors, as well as, and some of the people that I've done business with is kind of the same. I think the number one that I hear the most, as well as I read, is that a lot of entrepreneurs want independence. They want to be autonomous, right? And independence can be defined in a lot of different ways, whatever works best for you. Many of them want to control their own destiny. And, a lot of people go into business as a result of not necessarily liking their own work environment. If you will, they don't feel fulfilled, or they feel that it's missing, or, quite frankly, it's just not the direction that they see themselves. And so they start a small business. Others want financial stability and freedom. In entrepreneurship, although income is not guaranteed or profits are not guaranteed, there are, if you put in the work, you can improve profitability over time and thus hopefully improve your earnings potential versus and there's nothing wrong with working a 9 to 5, but in the 9 to 5, your earnings is capped, if you will.
Yep, exactly. Yeah, your value is at a certain level. It's a certain range, a salary range, right?
Absolutely.
Yeah, in my experience, it's always I want to be my own boss. But being your own boss, you have to make all the decisions for your company. And a lot of times your expertise may be in this one department in a big company. So that's why they need a partner with, people like us, accounting and finance professionals that can help take that idea to the next level, basically. So
I agree with you. I agree with you 100%. When you mention partnering and things of that, I mean, a lot of times in accounting or in finance, you may hear, or in a company environment, you may hear segregation of duties. And most people think that is just being done to prevent fraud, right? But I mean, at the end of the day, segregation of duties allows you to specialize in a particular area also. Very few people are do-it-alls, right? I mean, there are expertises that you mentioned that many individuals don't have and need. And it's best when you can either partner or find or hire someone, if your business can afford that, to be able to provide that expertise to be successful. In the end of the day, I think people like you and I provide objective financial feedback, right? A lot of times entrepreneurs, because it's their vision, they're so married to their vision. Sometimes it's hard for them to evaluate their decisions, objectively and critically. And that's what I think the beauty that you and I bring to the table is to be able to do that.
Oh, that is so true. I have written down the emotional stress that entrepreneurs don't realize it's going to go into because they're so married. That's a great word. They're married to this vision and they don't see that it could be pieced apart, or what's the strategy behind developing that idea,
Yeah.
And the other thing I wanted to talk a little bit about the myths and realities of being your own business owner, because yes, you have autonomy, you're independent, but then there's personal sacrifice that goes into it, right? You have to have time away from your family to develop the marketing. As an accounting professional, I have no idea about all the marketing aspects of what's needed to happen, and these lunch and learns, the education piece. I want to give that to the community because I think it's needed. We've been done such a disservice in regards to financial literacy. So
absolutely,
this is fun for me. But as far as marketing and the digital piece of all of that stuff, it blows my mind that I have no idea what all that encompasses.
Well, trust me, we provide that service, and we have partners that we use to be able to do that. Also, I am not. You mentioned that I have a bachelor's degree in accounting, right? I'm an accounting finance professional. You know, the intricacies of marketing.
I think your video froze.
I didn't build my website. I partnered with someone to build my website. So, but getting back to the question that I think you posed about the myths and realities, I think the first one is that, everybody believes that if they start their own business, they're going to make a fortune. We hope you make a fortune at the end of the day, but it doesn't necessarily mean that you're going to make a fortune. The next thing, I think that you mentioned personal sacrifice, and that was an excellent summation. People believe that you can work whenever you want, right? I mean, yes, you can have an elongated workday, if you will, but at the end of the day, but if you have a customer base in which you're trying to provide a good or a service, they're going to dictate when you're going to work, right? Because at the end of the day, they want you to make a commitment to them. They don't want to know when and they're going to receive the good or service that you promised them. And so you're going to have to plan your schedule around that, if you will. So that's that. They're ultimately, which most people think that they're being an entrepreneur, you don't answer to anybody. Well, yes, you may own your own company, but at the end of the day, you're going to answer to a customer if you want to stay in business. And so, providing those types of relationships, maintaining those healthy relationships, and just kind of looking at the end of the day that, yes, you may be your own boss within your own company, but at the end of the day, your customers are your boss. And so let's figure out a way to satisfy them also, if you will.
When you use the example of the 5 month or the 1 month turnaround for 5 years worth of financials, I was like, oh my gosh, I can't even imagine what time and sacrifice that he had to put in for that month in order to recreate those financials. So
yeah, absolutely. I'm sorry to digress for just a minute. I got texted by a couple of individuals who were trying to get in to the Zoom meeting, and so
let's see what's going on. I don't see any participants. Do they have the Zoom link?
Yeah, I believe they got it during the invite.
Yeah, I don't have any. Let's see. What's going on? Let's see. Yeah, I don't see. It only says 2 participants, and usually, what is their email address? Maybe I can invite them. Or here, I'll copy the invite link. Do you have the invite link?
I have the Zoom invite link. Yes.
Yeah, go ahead and forward that to them.
I did last night.
Okay.
After they registered, but because I wouldn't realize that it was in the evite because I didn't register, and but nonetheless, we can keep going.
Yeah.
I can I'll let them know that it's going to be recorded and it can view it later.
Yes.
Yeah, and then I guess getting back to a couple other myths. There's this perception because I'm the entrepreneur, I have to do it all. And I think you mentioned that also. You don't have to do it all. I mean, in the beginning, you may need to do everything. You may need to be the owner, the CFO, HR, et cetera. But as your business grows and you can afford it, or if you have the funding going out the gate, you can partner with individuals or hire employees. You just have to make the decision that's best on you. And at DAJ, we kind of help you figure that out.
I love that. That is actually a great, I always say that was one of my other personal sacrifices is the financial investment too, that you're going to have to come out with some funding out the gate in order to establish a business. And you have to, I think it's really great if you are partnering with somebody like yourself with strategic planning, you'll know if you have a small amount of funds to work with, where the strategy you should be putting those funds to in order to get to the next level. Because a lot of times, one of my biggest tips for especially e-commerce businesses is don't buy a huge amount of inventory when you don't even know what's going to be sold yet. You're going to be wasting money on products that could or could not be sold. So
yeah, excess inventory definitely does not help with cash flow, right?
No.
So, and we could talk about that a little bit later if you choose to do so.
Definitely. All right. And so you have to have self-discipline to survive as an entrepreneur. Like you were saying, you have to manage your time, your habits, and your energy, because it can be exhausting. It can
absolutely. Absolutely. Well said.
Yeah.
It sounds like you've been at this a while.
Oh yeah. Oh yeah. So how does establishing a budget help with sustaining cash flow?
I think a budget is paramount to sustaining cash flow, right? A budget, I hope most people know, but what is a budget? A budget is essentially a forecast of revenue and expenses, right? I think of it as kind of a guidepost for running your business, right?
Yeah.
If you look at it, when you build a budget, it should be how you measure success in your business. And so, what does it help you do? It helps you to control spending, to track your expenses. It should be a tool for which you make decisions, right? So, I mean, I think fundamentally, if you're about to make a purchase, or if you're thinking about making a purchase, the first question you ask yourself, is it budgeted, right? Do I have this in my budget? Can I afford it, right? And in the event that you find out down the path after you've set up a budget that, you need to make this particular purchase, but you didn't have it in your budget, it becomes a guidepost. You can take a look at other things and say, okay, do I need to purchase these things like you mentioned at this particular time?
Mm-hmm.
Can I forego those and make this purchase and ultimately stay within the financial performance guidepost that I set forth for my business? So a lot of people just set it and put it to the side, but I think ultimately what you have to do is you need to measure performance against budget, right? Because it lets you know whether or not you are meeting the financial expectations that you set forth for yourself when you laid out that plan.
That's really good. Measure performance against budget. Can you give an example of that?
Yeah, absolutely. Let's just say that you set up a budget, and let's say that hypothetically you started the business in 2020, at the end of 2020, and you set up a budget for 2021. And we're in the month of April right now. And let's just say for the month of April, you're going to be let's say for that first calendar quarter, you were going to be in what we call startup mode. So you're investing in the business, but you're not necessarily generating any revenue at this particular point for this hypothetical situation. So you said that you were going to spend in those first 3 months $15,000, just to throw a number out there. That 15,000, of which 5,000 was going to be in developing, your marketing collateral, your website, and any other content that you need to be able to, go after your customer base. The remaining 10 was going to be spent on, securing a property. You needed an office, buying a computer, et cetera. So you said it was $15,000. That's what you planned to spend. At the end of, and I would do this on a monthly basis, if not, more frequently, depending on whether or not you have the bandwidth. But let's say at the end of 3 months, you had spent $17,000. You overspent your budget.
Right.
If you continue to do that, and you don't grow, and your revenues don't exceed the pace in which you're forecasting them to be, you're going to run out of cash, right? And ultimately have to look for alternative financing or close your business, and we don't want that to happen. So the fact that you overspent by $2,000, what I would do as a prudent business owner, if I was advising someone, is like, okay, I need to get back on plan. So how can I get back on plan? I need to cut costs maybe in the next quarter to be able to get back on plan from an expense perspective. And the same thing applies to revenue projections. If in the second quarter, I said that I was going to have $20,000 in sales and I had 21,000, that's great. Okay, you exceeded your revenue target by $1,000 for that next quarter. Let's talk about what you want to do with that $1,000. I would recommend to a business owner, go ahead and put that to the side, because many times when you're starting a business, you're using a lot of your cash on startup, and you may have burned down what we want to have a reserve. So let's go build a reserve or a rainy day fund in it so that you can finance your business in situations in which things aren't necessarily as favorable as what you envision them to be.
Like COVID.
COVID case in point. Yes, exactly. Fortunately, the government provided some relief to small businesses, but I'm sure for most, as you hear in the news every day, that relief isn't enough, right? So having that rainy day fund will allow you to be able to stay in business.
Yes, exactly. And I'm glad that you mentioned that. Like all business owners, if there's anything that we can say business owners can take away from this, is have money in reserves.
Absolutely.
Right?
Absolutely. Yeah, absolutely. That's an excellent point. I try to tend to advise my clients, at least if you're starting a business, let's at least have 3 months of reserves, if not more, set aside to be able to, pay out your expenses. because again, this is a plan. Hopefully the plan goes as simply as you laid it out, but very rarely do they do. So having those reserves will help you be able to mitigate, shortfalls that may arise in your original planning.
So when you're helping your clients set up a budget, do you think that they know where their money is coming from? In your experience, do business owners know where money's coming from and where it's going to?
A lot of times they don't, and that's okay initially. I mean, that's one of the reasons why you're reaching out to entities like us to help better understand your business, right? And so what that has done is created an opportunity for the business owner to kind of get a feel for that. And so when you build a budget, hopefully if you build, let's just take the example that you're building a budget from, and this is a startup business. So you're making the decision to become an entrepreneur and go in business. So when you're building that budget, you're essentially forecasting what you think you're going to do for the next period, a year, 2 years, 3 years, however long you want to build that budget for, right? But one of the things I want to say is just be realistic. Let's be conservative, right? In terms of how you build that. Let's say that you think that you're going to do $250,000 a year in revenue. Let's not budget that way. Let's try to run your business at 75 or 50 to 75% of that and see what happens from a conservative perspective. And if you exceed that, that's just upside that will allow you to grow even faster. You can put that away to grow faster. So you're exceeding your plan, right? And then, like I said, let's measure performance to budget. And so when you get back to, looking at, do business owners understand where their cash is going? That budget will provide you at least an initial guide for where your cash should be going, where it should be coming from, and where is it going to, right? Mm-hmm. And so by monitoring performance to that is a very simplistic way, and as rudimentary as it sounds, or elementary, as it sounds, it's used in Fortune 500 companies, as a tool to be able to evaluate where money's coming in and where money's coming out. Another thing that I found that owners, sometimes don't invest in or really don't understand, and it's by no fault of their own, is that they don't set up a system to monitor cash flow, right? So, having an accounting system or partnering with someone to look at your cash flow is a good thing. Mm-hmm. And by cash flow, I mean two different views. There is the historical view that you typically see in the statement of cash flow in an accounting package or an accounting set of financials, mm-hmm. which looks at historically, what were your sources and uses of cash ultimately. And there are different methods for accounting for that, but that lets you know where the money went historically from one point to the next. But then there's also what I consider the forward-looking cash flow projection. And I like to advise clients to put together like a 13-week forward-looking cash flow by week of where you think you're going to be outlaying cash and what cash is coming in. Mm-hmm. At the end of that, you should be able to hopefully be in a position where your cash inflows are greater than your cash outflows. And we realize that in startup, that may not always be the case, but at some point you want to break even, which means that the cost that you've invested, you've earned enough revenue to equal the amount of cost that you've invested in that business from the start of it to that particular point. And then, when you start generating positive cash flow, where you've achieved, you've hit a part that's greater than break even, if you will. And so by looking at that and redoing that every 13 weeks, that gives you a plan. And then you may find within that 13 weeks that you need to reevaluate that, mm-hmm. but at least it gives you a plan to look at cash flow. And ultimately, if you partner with someone like us to hold you accountable to hitting those cash flow numbers and working with you to adjust accordingly if you don't, or if you choose to do this yourself, that you have a plan for, looking at that forward-looking cash flow, and you can hopefully see a problem before it arises, at least from a funding perspective.
Right, and that's really good for new business owners, because new business owners don't have that historical data to go mm-hmm. from. So they're in a position, when I partner with my new business owners, we always do forecasting, which is
Absolutely.
that 13-week, let's look ahead, where should we be if everything goes well? But then you're looking at the forecast to the actuals. What are the actual data points coming in?
Absolutely.
What are the real vendors that are giving us invoices that we have to pay? What are the fixed costs every month that we need to make sure that we're paying on time? And mm-hmm. who are our clients, who are our customers that are paying us, what do we need to do, what products, and services do we need to really bump up and beef up, because their customers paying us to do these things. So that I love that 13-week evaluation, basically.
Absolutely. And that's every 13 weeks. So 4 quarters a year, you're essentially looking at that, projecting what your cash is going to be. And if you want to go out further, that's fine. But at a minimum, I think 13 weeks is a great amount of visibility.
Yeah. So I didn't want to give the new business owners too much because they don't have those. I did a session for new entrepreneurs and we were talking about forecasting. And I was like, make sure you're actually putting the data into a software. Even if it's in an Excel spreadsheet, you need
Absolutely.
to track that data, because so many times they're just paying bills, and then your bank has a zero balance. You have to be able to track it.
Absolutely. And I think one of the things that owners should do, and I think, large company like Dell made this famous, is that they essentially use their payables to finance their business. So what they did when they were working with suppliers, and I know that this may be difficult in a small business environment, but if you can say to a vendor that I'll pay you in 15 days and you take 15 days to pay them, but your customers are paying you prior to 15 days, if you balance it right, you're going to have positive cash flow each day, right? So it's, trying to collect on your receivables as soon as possible if you are extending credit terms to those people you're doing business with.
Mm-hmm.
If they're paying you cash or credit card right now, this may not apply, but creating incentive though, if they have the ability to pay you by credit card, by maybe offering them a small discount, and this is something that you model, that you offer them a small discount to be able to pay you sooner than what you have to pay your suppliers. For example, you have to pay utilities every 30 days, but if I can get money in prior to 30 days, then I'm balancing cash flow. So I think the advice that you're giving your customers is very sound.
Yeah, and it's huge, because I don't think entrepreneurs, they have that dream, they have this vision, and these are those little intricate details to keep the business moving forward. So
Absolutely.
Definitely. And I think you answered my last question was those top 3 tips to sustaining cash flow. I think definitely, tracking your ins and outs of the money. And I love that you said a lot of business owners, in their personal finances, they'll, clip coupons and look for the best deals, but they don't do that as a business owner.
Absolutely. Things like, getting 3 quotes. Anytime you do, if you have the time to be able to do it, to kind of to try to find the best price. These are simple practices that may take a lot of time, or take a little bit of time, extra time, but will provide you, hopefully a greater benefit. Thing you mentioned earlier, and I think I mentioned it also, use a software tool. If you can only afford a spreadsheet, that's fine, but hold yourself accountable. If you have a bank account, and you should have a bank account for your business, a checking account, saving account, whatever you're going to use, take that, download that information on a monthly basis, and compare that to your budget. There are a lot of tools that are fairly inexpensive to be able to do this. I'm sure you use various different tools. I have different ones that I've used over the year. It really comes down to owner preference. They all do about the same thing, but use that tool, because at the end of the day, it allows you to quickly analyze, where you're spending money and where you're generating revenue from, and compare that to a budget. We talked about, collections and things of that nature. I think earlier on you mentioned keeping inventory lean. We definitely want to keep it lean. Don't buy a bunch of, just because it's a great deal doesn't mean that you need to buy it right now. Right. Because at the end of the day, what you have done is tied up cash that you could be using somewhere else to generate revenue. Because if it takes 6 months for you to burn through that inventory, I would think that perhaps maybe you might have bought too much inventory, especially if you can get it on more of a just-in-time basis. Why tie up that cash and create a cash outflow? Keep that cash in the bank. It could be earning some sort of, interest in a small, low risk investment. So you're making money on your money rather than tying it up and having it sitting in a closet or a warehouse.
I love that. Making money on your money. And that's the whole point to be in business, is to make money, right?
Yeah, absolutely. That's one definitely motivating factor. And I guess the last thing I would say in terms of monitoring, or improving or sustaining cash flow, is always look for cost cutting areas, right? I mean, there may be something that you budgeted that, you thought that, originally this is how you needed to do it, but you may come up with a more cost effective, a more optimized, or a more efficient way of doing it. So look at that. And when you do realize that cost cutting, put it aside, or decide if you're going to invest to grow the business. You may need to hire another employee that you've been putting off at that particular, but make sure that you have taken that savings, put it into your cash flow projections, and reforecast, to use the term that you mentioned, to be able to evaluate or to create a plan moving forward, because dynamics change every day.
Right. Can you give an example of that? Like I think that's a really great tip, but how would a business owner, what would you say to look at? What would be the first thing you would look at to save money?
For example, the first thing that I would look at is, let's really examine your fixed cost, right? Let's say that you have insurance and things like that. You need to pay them. You're going to have them, mm-hmm. right? But let's try to get the most competitive, cost in there. You may assume that you're going to pay X amount of dollars for that insurance. Reevaluate it. That's one thing that at the end of the day, even though you may prepay for it, you have to pay it in advance for 6 months, or you may pay as you go. Whatever you don't use, you get back, right? So that's something that you can evaluate. Do you need an office phone? Can you use your cell phone and have an additional line or whatever, right? Do you need to buy a fax machine up front? Or can you just essentially go pay for faxes as you go, because you can email a PDF? So there are a lot of different things that you can just use technology that may force you not to invest in so much fixed cost up front. Can you office out of your home initially before you need an actual office space, or to invest in brick and mortar? I think that COVID at this particular point, more so than any, has really allowed entrepreneurs and larger entities to really look at, they can be just as productive in virtual environments. I'm not saying that nothing takes the place of face-to-face interaction and things of that nature. Certain things you just can't do, but let's stage that. Maybe look at a virtual office versus having an actual space that you utilize once a week, if you will, right? So there are a lot of different things that are out there that you can continually evaluate as you go to determine that you can save money doing those things.
One of the big things with the virtual office, like Zoom, those subscriptions that you need, a lot of people do the month to month because they're kind of risk averse, but the annual ones can give you a better bang for your buck, basically.
Absolutely. I get an email every day, probably every couple of weeks, about a 20% reduction if you pay in advance. Sometimes I've seen it up to 50%. Yes, you're correct. If you have the reserves, you've looked at your cash flow, you can make that purchase. Why not do it? You're buying it anyway. So yes, those are the kind of opportunities where I think buying in bulk or buying at a discount makes sense, versus, like you said, with inventory. If you're going to start the e-commerce business, as you said, I'm going to have a bunch of stuff. I would engage in that type of business. Let's use a drop ship model, where someone is housing that inventory for you. You may pay, $1 more, but you're not investing in that inventory. You're not having to carry the risk of owning it. Let's heaven forbid something happen to where you're storing that particular inventory. Now you out of that inventory, and you need to replenish inventory to get back in business. Where if you have someone where they can drop ship on your behalf and they're trusted, they're carrying the risk of the inventory, and you just factor that in your financial model, right?
Oh, that's a really good example in regards to, paying a little bit more. It may be a little bit more, but for the risk, it'll be worth it. So,
and you can model that, right? You'll know that if you bought it yourself, this is what it would cost. If you buy it on a drop ship, this is what it costs. And you can model what does it cost to to store it, right? Are you going to store it at your house? If I do this, is it covered under my insurance? Do I need additional business insurance? All of those things that you can go get, it just takes a little diligence, and you can find, companies like us that can help you do that, right? Or provide you the toolkit, I guess, if you will, to help you evaluate those things. Right?
Yeah. And that's why I do these lunch and learns. And I'm just so grateful for your knowledge. I think it's very well said. Everything you said is just, it wasn't hard to digest. We have the information. There's people out here that are willing to help those small business owners and entrepreneurs to be as successful as possible. We don't want to see the businesses fail. We want to see you succeed. We have this knowledge and information, so partner with us, basically. But I wanted to Is there anything that I haven't asked you? I was going to wrap up with some takeaways for everybody, but is there anything that I haven't asked you that you wanted to address?
There's one thing that I would comment on, Amy, is that, I think ultimately, hopefully your listeners got to see, or got to hear, excuse me, the value of the service that you would need in your business. A lot of times people look at this as just, business owners look at this as just, oh, that's just accounting. I don't really need to invest in that, or finance. I don't really need to invest in that. But if you think about it in terms of being a measuring stick for evaluating your business decisions and really partner with you and give you objective advice, that's worth paying for, right? And there are different packages that I'm sure you put together that I can put together to help you, from the basics to just tracking your revenue expenses to helping you evaluate and make business decisions. But at the end of the day, don't look at it as just a cost of doing business. Look at it as a cost of being successful in business.
I love that. I always say it's an investment, because
Absolutely.
it could save you a lot of time and heartache. I tell my business owners, your zone of genius is something different than mine.
Absolutely.
Our zone of genius is accounting and finance. I love Excel spreadsheets. Why use a calculator when it can take me 30 minutes to create a beautiful spreadsheet for you?
Absolutely. Absolutely. Well said.
Yes. But yes, it's an investment in your business and in your future, because we could save you heartache in regards to you're not seeing the spending and you're not seeing what's going out, the ins and outs. And that's basically
Absolutely
what cash flow is, right?
That's exactly what it is. An excellent definition. I won't even say analogy. Definition is that, by virtue, in its most simplistic form, is exactly what it is.
So as you were speaking, I was taking a couple of notes so that we could give the people listening to this later some tips on business planning was a blueprint to your success. I love that.
Absolutely.
You said that. And the fact that you could use it for potential investors, loan acquisitions, you need to have a business plan in place with at least a 3 to 5 year horizon. And that'll help with budgeting, your forecasting. You can look at your budget that you plan with historical data and with forecasting, but look at your actuals, the 13-week evaluation in regards to what's actually coming in and out. How does it compare with the budget that you created at the beginning of the year or at the beginning of the quarter?
Absolutely.
And it'll help you measure performance and control what's being spent, for sure, with the budgeting. And that'll help you sustain cash flow in the end.
That's ultimately what you want.
Yes. And that's what's going to help you maintain your business and create success and take you to the next level, for sure. Can you tell everybody, once again, thank you so much, Damon, for doing this, for sharing your knowledge. And if you could say your website and contact information one more time.
Yeah, absolutely. So my website is DAJ Business Services LLC, all one word, .com. All right. That is the same for Facebook and Instagram. As far as Twitter, it is DAJ Business LLC. And if you were to go out to my website, like I said, there's a contact us button that comes directly to our team, and we'll be able to take a look at that, respond to you, and see if we can help.
Beautiful. Thank you so much for your time. I appreciate it.
No problem. Thank you very much. I hope you have a great day, and thank you for this opportunity. Really appreciate it.
Yes, definitely. And I just wanted to wrap up and say my next Instagram Live is on Monday. I am going to be speaking to Aisha Green, and she is the budgeting person at the Austin Community College, and she's going to help us talk about leaving a financial legacy as business owners. So many times, I'm not sure if you've run into this, Damon, but so many times the originator of the business passes away or becomes incapacitated, and then the family members don't know how to sustain the business.
Yes, I have not run into that personally, but I have heard of that, and it makes perfect sense.
Yeah,
and I think I'll tune in. I'm sure I can learn something. fun.
Yeah, definitely. So so that's going to be on Monday at 7 p.m. on Instagram. So it's building a financial legacy as business owners. I hope you can join us. As always, you can reach me at amycobb.co. Thank you so much. Have a great weekend.
You too. Take care. Bye-bye.
Bye.